Hi, Yash.
Hello, Sumera. So, there were two important orders which came from the insurance regulator last week, which red flagged the violations which happened in the Axis Bank Max Life deal. There were penalties which were imposed on both companies, Axis Bank and Max Life Insurance. And seems like those two orders were just the start of the regulatory action. At least they were not the end of the regulatory action as far as this particular transaction is concerned. The latest that we've been given to understand is that the insurance regulator is not comfortable and is unlikely to approve the balance part of the transaction, which is still remaining to be executed, with the valuation which has been put in the first part of the transaction. So Axis entities, which is Axis Bank and two more Axis entities, their intention was to acquire a total of 20% stake in Max Life Insurance. About 13% has already been acquired, 7% is remaining. 13% is where violations have been red flagged and penalties have been imposed, and for the balance 7%, IRDAI says that the valuations will have to be uniform with the previous transactions, and they will have to be a fair market value as far as those transactions are concerned. Both these 2 points, uniformity in valuation and fair market value, were where IRDAI had raised red flags, and that is something which will concern the balance part of the transaction, where IRDAI says it has to be done on those two parameters. Importantly, what are the two questions which we get after this particular IRDAI move? One is that what will be the uniform and fair market value for Max Life shares? And the second one, if a uniform value has been arrived at, which is much higher than the stake that Axis Bank acquired in the first leg, then would Axis Bank shareholders be ready to pay that higher price for the balance part of the transaction?
All right.